As we all know, in the US, the residential building and supply industry is experiencing a time like no other, and there are many forces at play. We've assembled three experts in the field to comment on how builders and suppliers are responding and what things may look like in the next 6 to 12 months. Our panel includes David Murray, CEO at BuildExact, Craig Webb, President of Web Analytics, and Steve Yates, President of BuildExact in North America. We'll start with David. Can you tell us a little bit about the increase in consumer savings and their changes in spending behavior in the last year?
Yeah, thanks very much, Brenda. Good to be with you. So interesting what we've seen occur over the past 12 months is a change in the spending habits that has been one which was through the lockdown periods that happened in the country is people conserving capital, so not spending as much. But what they did start to do was plan for how they would spend that capital as the restrictions opened up. So new housing plans we saw within our product increased significantly. So the demand started to build within the market. As we've seen a change and I guess an easing with restrictions and confidence returning to the market, there's absolutely been an increase in the activity in construction, both from a remodeling perspective and also from planned new home starts.
Great, thank you. Craig, can you fill us in on the changes in buying behavior?
The lockdown did not lock down people's finances. In fact, because they were at home, they were much more interested in buying any way they could. And dealers across the United States had to scramble to make sure that they could meet the customer where the customer wanted to be. And that meant usually a very quick upturn in their e-commerce activities, sometimes suddenly turning on the e-commerce software that they had. As well as introducing things that they had long contemplated but never implemented, such as buy online, pick up in store. The amount of communications also that were going on back and forth between the customer just really skyrocketed between the emails that were going on, as well as the web pages and the like. And the result was pretty stark. If you take one major roofing company in the United States, for example, they're at the point now where 15% of all of their sales actually take place through e-commerce. And that's an almost unthinkable number compared with a few years ago.
So how has this increased the demand for building materials and supplies overall?
Well, the building materials are generally being desired for single family homes and for homes in the suburbs and exurbs. Multifamily construction is still going on, but we're sort of seeing the crest of a wave that began many years ago. Commercial construction is already starting to wane a little bit. We're also seeing among the people who are not looking to buy a new home, what you might call nesting by the baby boomers, as well as improvements of the current homes, better decks, more exercise rooms and the like. There has been this major history in the United States of not building as many homes as we needed over the past decade. And now that Gen Xers have finally gotten to the point where they're getting married, having babies, wanting to do life-changing events, getting out of college, that's creating a demand for housing. Only lately, and only lately, have we seen the run-up in prices in the United States start to temper demand, and that's only a small bit. Demand still remains very strong for a half dozen different factors.
Steve, we're going to turn to you. How are building material suppliers managing their inventory?
Well, the building material suppliers today are really struggling with having sufficient materials to meet the demand. And I think it's illustrative to go back to recall March to June period of last year, when a lot of manufacturing capacity voluntarily drew down and reduced forward capacity, because of course no one really knew what the implications of COVID, what they would be. So those voluntary introductions, once put into the production flow, had a dramatic impact on the availability of building material supply. And of course, involuntarily into the third and fourth calendar quarters of last year. Even if they wanted to produce more materials, they were unable to because of COVID restrictions around able to get workers into their production facilities to produce.
Great, thank you. Let's move on. So the question is, how have builders and their suppliers responding to current demand?
All right, so thanks for that question, Brenda. So what's interesting through the pandemic has been a change in what the builder behaviour has been. It's moved from being a priority around, how do I quote work, how do I win work, how do I turn those quotes around quickly, create a professional quote to win. As we were talking about before, the demand obviously has massively increased across the market. So it's now moved from being, do I need to win work, to actually, I've got plenty of work, I need to fulfill that work. So what we've seen transpire is that through the pressure on the supply chain that Steve was talking about, is now the priority is about securing material. So securing materials to get jobs completed, to get them progressed so that they can move to the next stage of the job. So now as we're talking to the builder about the pain points and the challenges that they're having, it's less about, how do I win work? It's more about how do I fulfill and complete the work? And we all know that there's pressure within the supply chain, the builders talking to the pro sales dealers about how can you fulfill me the product that I need to be able to complete my job. So it's definitely a move in from I need to win work to how am I managing my project more effectively, ensuring that I secure materials more effectively, rather than I need to I've got a sense of urgency about winning more work.
A dealer friend of mine in North Carolina gave me one of the best descriptions I've heard from building material suppliers across the country. And he said, I've never made as much money as I did in the last year, and I've never enjoyed myself less. Things are absolutely painful. Most of the time, dealers are spending their time sourcing materials. And every time a truck arrives, it's almost like Forrest Gump's box of chocolates. You never know what's going to be inside because you don't know for sure what the supplier, the mill has delivered. At the same time, the price increases have been so dramatic that it has affected the credit and cash flow arrangements, both for dealers as well as for builders. Dealers have to decide whether they want to increase their credit lines so that the builders can get the housing packages at the prices that those packages are these days. At the same time, builders are coming to them with problems because if, for example, cabinets that you expected to receive in 2 weeks, and so you would start your work on a job in 2 weeks, if those cabinets don't arrive for 6 weeks and you're not going to start the work without the cabinets, what are you going to do for those 4 weeks? How are you going to get that cash flow to go? So those kinds of those halting starts and stops, the surprises, the communications, the sudden changes are causing an enormous amount of stomach acid to go through the stomachs of builders and suppliers around the country. And then on top of all that, there is a pushing back against the pricing commitments that some builders are making. They want prices guaranteed for a longer period than dealers are willing to make. And then on top of all this, everybody's looking for staff. And if they had more staff, it wouldn't necessarily enable them to do a lot more, but it certainly would make them feel a lot less nervous.
Can I do a quick follow-up question to that? Because I just have a question about, builders are, they're putting out quotes, and are they building anything within that? Are they building any kind of escalation clauses into their bids now because of the volatility of prices that are happening in the marketplace?
According to the National Association of Home Builders, their most recent poll found that 47% of the respondents to that survey said that they were putting escalating clauses into their contracts. The kinds of jobs and the kind of pain that people are going through, frankly, depends on what kind of a project you're doing. If you're a custom builder and you set up an arrangement with a buyer to build the entire or commit to the entire house before you build it, you've got one kind of pain. If you are a tract builder, a production builder, you've got a little bit of extra time between when you finish the job and when you start pricing the job. And so you're doing a little better. If you are another type of builder, a spec builder, for example, who doesn't even try to price the job until the job is finished, you don't have those kinds of pain. So not everyone is feeling it the same way, but everybody is feeling something a little bad.
Great, thank you, Craig. What should builders and suppliers be doing to prepare for the next 6 to 12 months when the supply and demand will hopefully rebalance itself? And who will be the winners? I think we should start with David Murray. Tell us a little bit about that.
Yeah, so thanks, Brenda. So as we were talking about before, the pressures that are being faced by the builder are around the cash flow management because of not being able to get supply. It means that they have, these extended grey days within doing their projects, which means that they're unable to pay their suppliers. So if they're unable to deliver to their customer, then that means they're unable to obviously invoice their customer, get cash in the door, and pay their suppliers. So what we see happening here is those that are of scale, the bigger builders obviously are able to weather that storm. The smaller builders are going to come under increasing pressure. I have spoken with a number of suppliers who themselves are saying we're looking at those smaller builders and the credit terms that we have with them and looking at, well, perhaps do we extend them? Then there's concerns that come in, well, do they get the insurance in extending the credit terms to those builders? So these conditions that are playing out in the market are unprecedented for the small builder. So they need to absolutely get close with their supplier. They need to be communicating with their supplier about what is happening with their projects, so the supplier can be informed to ensure that they're able to meet the demand and the needs that the builder have. I don't want to make a prediction on who's going to be the winners out of this, but I absolutely think that those that are leveraging technology to engage with between the builder and the supplier will have an advantage, because for me, this is about insight. It's about information. What Steve was talking about with the capacity in manufacturing being reduced, and we have one of the largest supplier during the initial phases of the pandemic reducing capacity by 40%. Now, if we'd been able to give them some insight of what was happening with our small builders and the amount of quoting that was going on, we would have said, that's a mistake, don't do that. Now, by the time we understood that that's what they'd done, it was too late. The constraints were already there. So as much as a builder can give insight to their supplier about what demand is coming along for them, that will give them the ability to ensure that they secure the supply that they need to deliver. The other factor of this, which Craig talking about the demand of new housing, we don't see this slowing. So I was talking with the one supplier that was hoping it had plateaued, that it was going to start to decline. So whilst there's this challenge of meeting demand for current home building through the lack of supply, equally it's ensuring that secure work in the future. So don't stop quoting is also really important for these builders.
I do believe that we are going to get some rebalancing in supply demand, and the issues are going to shift for both builders and suppliers. And those pro dealers and suppliers to pro dealers who have invested in their customers' success, as the changes in buying behavior that we've been talking about today have occurred, who've adapted to the changes and met the customer where they are and met them in how they want to do business, are going to actually then have a relationship that they can collaborate on into the transition that we will see as demand and supply rebalance, i.e., you might not be concerned about bringing in new customers now, or you might indeed be imposing quotas on customers now. But this is a long game, and the relationships matter over time. And so suppliers who are able to look to their customers, provide the tools to help their customers succeed, are going to be able to bank on the quality of those relationships as we move forward into the next 6 to 12 months.
Great. Craig, the industry as a whole, what is being done to prepare when supply and demand rebalances?
Well, I think we need to talk a little bit about what the word rebalance means. Rebalance may mean more of an equilibrium between supply and demand, but it will not mean a return to the old pricing. There has been one prediction I heard today is that once we rebalance, lumber prices will be about 30 to 40% higher than they were pre-2020. Second thing we need to think about is how long it will take to get there. And I tend to believe that the best equivalent to what we are going through now is what happened in the United States after World War II. And I would point out that when Levittown opened, that famous mega complex on Long Island, Levittown opened to sales in March of 1947. So 15, 18, 20 months after the end of World War II. They sold 1,400 homes in 3 hours. There was that much demand. And I think that we're going to be seeing a period of demand a lot longer than we think. And this talking about rebalancing, I think it's a little less important than talking about the need to maintain incredibly tight communications between customers, between the manufacturers, the dealers, and the customers. So consequently, if we can think as much about that and the nature of that relationship, I think that we're going to be much better served going into 2022.
I like that perspective, Craig, and I certainly support it. And I would like to offer one more thing. Let's go back and remember what it was like in October of 2019. We were talking about deflationary pressures on materials. And the reason we were all talking about deflationary pressures on materials is that I think it's a safe generalization to say that most manufacturing capacity in mills around the world were running well below their capacity. And one of the reasons they were doing that was because of the huge CapEx investment that had been made post the GFC in manufacturing capacity. So it didn't matter how much demand was created at that level, there was plenty of surplus manufacturing capacity available to us in 2019, hence the pricing pressure. We get COVID, we get a tremendous shift across our economy, and we get supply slowdowns, not because we don't have the manufacturing capacity, but not because we don't have the stand-up plants, but because we thought and we planned to slow down, and then involuntarily we were forced to slow down because of the condition of our workforce. So when you think about how does this come back out, in the last 12 months, there's been an increase of 1.4 billion board feet capacity of softwood in North America. The projection is for that to be another 1.6 billion board feet next year. As some of our destination or supply markets recover from COVID, they don't have to build a new plant to meet the opportunity you describe. They simply have to re-employ a workforce. And that's why I think that the supply will come back and meet demand a little faster than it would be if we were otherwise having to build all of that manufacturing capacity anew.
There's also a bit of a fear or almost a, let me put it this way. I think America is going through a toilet paper moment with regard to lumber.
Yes.
Everyone's got a little bit of fear about how much lumber we need. And there, for example, there are some estimates that we've actually already got enough lumber on the ground or commitments made to build 1.7 million homes in America. Now, a lot of people believe we're only going to build 1.3. Maybe if we go crazy, we'll go to 1.5. And that means that there are something on the order of 200,000 housing packages that wouldn't be built. And until we all realize that we've got enough toilet paper or we've got enough lumber to meet our needs, then we'll finally settle down a little bit.
And I agree, and I think it's worth noting that, of course, lumber prices in North America are 22% off their high of about 3 or 4 weeks ago. So, the pricing is the pricing pressure is putting us into an interesting perspective. So, I would not want any of our builders, nor any of our pro dealers, to be caught not thinking that there may be some major shifts in the other direction, which will mean they'll need to attend to, a broader array of business interests, including generating goodwill and customer relationships going forward.
I am particularly worried by the number of dealers who said that they are, in a sense, hunkering down. They're not taking on new customers. They are allocating to their current customers. That does spell long-term trouble. And the only way you're going to be able to serve more customers is by having technology and services that enable you to reach a larger number of people in a more efficient manner.
I'd love to hear your guys' thoughts on, and anyone can just be open forum. How can technology or any kind of software help the current situation? And in any kind of specifics or in general would be great to hear from all of you.
Perhaps if I have a go at this first from the, if you like, the demand side, and perhaps then pass to Craig and Steve. Look, this is an opportunity for the industry. Never before has there been a catalyst where, where a builder couldn't go into the lumberyard to not only pick up his order, but to buy other stuff that he would typically pick up. So what we're seeing here is the suppliers, the pro dealers, and the builders recognise we need to embrace technology to improve the inefficiencies that exist here. And so, the opportunity for builders to get a better handle on what the future demand is going to be from their customer, and I don't just mean from what the total project is, but specifically the material requirements that then can be passed through the supply chain to the manufacturer. So the manufacturer, rather than building materials on historical demand, can actually do it on future demand, and I think that's a great opportunity for the industry. So it's kind of some rudimentary things, really, in just in time delivery stuff that's been in other industries for some time, and the opportunity for the pro dealer with the builder to connect that that visibility of supply, I think is a fantastic one that the industry should take. From our perspective, we connect the builder to the pro deal, to the merchants. We can give that insight of what's happening from the residential construction and remodeling perspective. It's then for the merchant to connect that into the manufacturer, which other technology providers need to consider. And perhaps that's where Craig and Steve are better versed to respond.
One consultant I spoke to said, if you can imagine the typical amount of time that it takes for information about demand for the customer to get all the way up to the original source of the product, the manufacturer, and then work its way back down to that customer, it could take somewhere upwards of 10 days currently to go through the daisy chain. If there was a way to cut it, let's say, down to 2 days, imagine how much more responsive industry would be, how many fewer roadblocks we'd have, how many fewer crashes we'd have, and how much faster the products would traffic through the supply chain. And that is the goal. Now, I've talked to major manufacturers of lumber, and their major efforts over the last few years is just to improve the communications inside their own company, inside their own link in the chain. And so we're talking about a longer term process. But if there is a way to have jumper wires in the cables of this system, and so that you can get those insights, I think almost everybody would end up better off.
I really like the chain metaphor, Craig, because the builder, the supplier, the manufacturer, the customer, the asset owner, they're all links in the same chain, and they're only as good as their weakest link. And so best to bring your resources to bear to help each other. And it's a simple concept, but in reality, technology is an enabler of trust in those relationships, to strengthen those ties and to strengthen those links. The price you pay for something doesn't harm you. The price you sell for in isolation isn't what you win. It's the difference between those two things that matter the most. And it's the difference between the time of those transactions that matters a great deal. And technology is able to reduce the amount of time between those two events. And in doing that, it also reduces a lot of the risk factors involved between those two events. So if we have two things happening, if we have a pro dealer recognizing that his customer is a link in the chain as much as the manufacturer, and then recognizing technology is available to reduce the time, the lapse time and the risk that you referred to, you have a much more efficient process. And it enables people to engage in relationships and develop business together.
Great. Well, I want to thank you all for your time and expertise. I think if we all had a crystal ball, we could all figure this out on our own and have it all solved. But until then, we'll have to rely on our knowledge and technical expertise at this point. So thank you all for your time. Appreciate it. And well, that's a wrap.